What's happening, guys? We have another Sunday video coming at you, this time for the 25th of September in the week ahead. Short and sweet again, LFIW, MLGO. I want to talk about those. I'm going to do this little first part. We'll get into MLGO and LFIW, and then we will get into the scan for the week ahead. I always try to give at least one takeaway. Usually I give like 10. But as I've been using my high-tech recording studio, I'm just trying to rebalance what I do. And, I sign up for all these different things and just kind of adding value. And then all of a sudden it becomes part of my daily routine. And, you look back and you're like, wait a minute, like all I'm doing is this. So I've tried to simplify how my Sunday videos are so that it's still fun and it's not just, doesn't appear to be just work. So my goal is always to give you guys at least some sort of takeaway that you can apply on Monday and basically apply it to your trades. For me personally, I'm a visual learner. I've got Audible books, I've got books, and maybe I start a couple and then I just give up on it, right? My mind wanders and I don't stay too focused. And so for me, charts, going back through things, reverse engineering, that's how I learn, and that to me sticks. And so that's sort of how I educate, or at least review these types of charts or setups for you guys. So for some that'll work, for some it won't. And so I want you guys to think about that when I do post charts and all that stuff. There's a 99% of the folks are appreciative, and then there's those 1% that are like, oh, it's I told you so, I did this, I did that, blah, 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 blah. It's none of that. I don't care. I don't care what people think. I am just trying to put good information in front of traders. And so if you want to benefit from that, great. If you don't, then that's fine. I'm not worried about you. So please, when you see charts and when you see me going over things, I'm not over here saying I told you so. In fact, MLGO, I got very late to the trade. I didn't want to get into a crazy headache. I didn't want to get chopped up. It was Friday. I had plans for later in the day, and I didn't want to be in a situation where I put on that trade, I end up in a circuit halt, and I just tarnished the Friday and the weekend ahead. So that may not jive with somebody else, and maybe they got aggressive at the 950s or 9s or whatever, and that's fine. But what I want to go over is why I said what I said on Friday, why 802 was such a key level and a strategy that I use, and how it could potentially help you on the trades in the future. So that's my true goal here, and hopefully it makes sense for you. And hopefully it aligns with what you're trying to do here. Anyway, Traders for a Cause, you guys saw a couple tickets went through, and Zach, as I said, from the start, we sold out extremely quickly. We had the early birds, sold those out within, I think an hour. Then we had a few more, and then I said once we figure out the sponsors, so a sponsor gets, say, 10 tickets, 5 tickets, 2 tickets, whatever. As they say how many they're going to, bring, we ticket them, okay. We collected 3 back, we collected 4 back, we collected, 2 back. So then I think he put out 10 or something like that. There might be 5 left. I'm not even sure. I didn't check before. But just FYI. And if you were on the waiting list, you already got heads up on it anyways before it went to Twitter. So that is good. Actually, it's not called Twitter anymore. It's called X. But I did want to say, items needed, silent auction items. If you guys, it doesn't matter, who, what, when, where, why. If you're a competing service, again, I don't care. This isn't about, selling another subscription. This is about, helping people out. So we've had like trade ideas and scans and DAS and all that kind of stuff before, where people can bid on an annual membership, right? So maybe you get it for a third of the cost, but the charity wins. And if you are giving that sponsorship or that item, then you're doing good and helping the community. So reach out. Otherwise, we do still have sponsorship opportunities available. T-shirt winners from last week: Purple Mango with a 0, and then Zarlos 9445. So that's that. I want to get into LFIW and I want to get into MLGO, and then we'll get into scan for the week ahead. All right, guys, so for the second part of scan, I wanted to go over two situations. One was LFIW last week, and the second was MLGO. So LFIW, the focus that I wanted to have on something like this is the sheer amount of volume that was traded, right? So if you go, just to make it easy, you can go to the weekly chart and then just scroll over the volume bars. You'll see 700 million and then 1.2 billion, right? So basically 2 billion traded in the last 2 weeks. That is way different than something trading 20 million, 50 million, or 100 million shares. So the key here, and this is just a reminder to myself, just because, you know, I made the same mistake thinking like, all right, we're going to go all the way down to a dime, and, you know, ignoring certain action that was happening. Not that it was bad. It was just, you know, I could have been up quite a bit more. So we had this huge move, and we completely unwound in the close that day. So that was great opportunity, great trade for me. Covered at the close and the rest after hours. Then it popped back up. You can start to see that there's this trend and this bid starting to come in. You can start to see over here that they're starting to kind of soak particular levels, right? And you can start to see that the congestion areas are pretty much the same, and you can use the same sort of consolidation and support over here to help better your entries. So the biggest thing is whether or not you're putting yourself into a position where you're emotionally attached to these key levels. So the biggest thing, and the reason why I draw these channels, is as a visual reminder to say, hey, if you're risking to this level and you're going to be emotionally, you know, attached to that attempt, that trigger, that exhaustion move, then you're trading it wrong. You know, if I'm going to size into something, I'm sizing in after it tests this key line. I'm sizing in after it breaches this line. I'm testing in after it rejects at that line, not before. Because if it's before, then I'm going to be emotionally attached to it and likely make adjustments into what ends up being the top. And so anytime that it's over these key lines, I always, and you'll usually see me in the room just like on this one, the more it trades over this level, the better. Because after it comes back under this key level and fails to follow through, you don't just have some traders that were upside down. You now have all of these traders upside down. And it's not just buyers. It's also short sellers that covered that are no longer bidding for that stock, right? So that's the part that you have to kind of think about as to why you don't want to put yourself in a position to make adjustments or panic or be emotional at any of these levels. And the same thing for a long side trader. If you're trying to buy into a pullback and you are setting yourself up for failure at that exact line, meaning if it breaks that line, you're out. Most of the time, it needs to recheck in with that line. Maybe it dips under it, comes back up. Maybe it swipes up over it, comes back down. But you can't set yourself up to react in that moment. And if you do, more often than not, you're probably just going to get chopped up. So keep that in mind. But again, the more it trades over key levels, it's not just breakout buyers. All of the bids that you're kind of competing against, there's probably a chance that you were trying to cover and then you didn't get filled, you didn't get filled, you didn't get filled. That's all, the same people as you trying to get your cover, to the point where they emotionally react. They stop out. They have to take the offer. And at that point, there's an exchange. And at that point, you see the volume associated with it. And now they're no longer on the bids. And that's why you get that nice slam back down, because everybody that was on the bids slowly ramping it up goes to the offer side, and then that's it. They're out. And then that's when you start to focus, because now you need to see, does the next rebound stay heavy? Does it soak? Or does it fail to follow through? If it stays heavy and fails to follow through, then you're on the right track. But if it starts to consolidate, hands off. So this was a great example of that. Second part of this is, again, like I said, when you're talking about billions of shares traded, just like Mullen, it's not about the company. This is just a trading vehicle. That's all it is. And all that matters is the trend until the trend breaks. And if we're in the trend and it's holding key levels and it's holding key spots that, looking left, you can kind of see, I mean, this is by design. And they're keeping it afloat. They're keeping it trading. So when and if you want to be patient and let this thing fade off to a dime, 8 cents, then we should be under 17s. We should be failing to follow through. And then you could start to think about that. But for now, you have to assume that 17s is probably going to be the base until it proves otherwise, in which case you have another trade, whether it's scaling in more or rescaling in if you had covered. So just think about that. That's how I trade. That's what I look for. That works for some. That works for, may not work for others, rather. This is something that kind of also helps me from pushing too many buttons. And as you guys know, I've tried to rezone in on what I do this year as far as hitting a bunch of buttons, especially when it's lower price like this, because obviously the commissions can add up. But I try to zone in and press less buttons because we're not in a 2020, 2021 market. And when I was doing that in 2020 and 2021 and even 2022, it paid off enormously when things cracked because I'm constantly trying to resize back up, right? So that when and if it does crack, I've got my size, and instead of making 1x, I'm making 5 or 10x because I've sized in. And so in this market in 23, when I do that, it's just a lot of like in and out, in and out, in and out, and I'm not really getting that secondary flush because there's a lot of absorption and staying power in this market, and it's not like it was before. So that is what I had to unlearn this year in order to kind of get a little bit better, not necessarily even trades off, but just better ROI for time spent at the desk. So then the other one was MLGO, which you guys should all be familiar with, not necessarily just because it was on scan, but just because we've seen it in the past and it's been a crazy one in the past. But MLGO is one of the examples that I've, this was on radar recently, and it was on scan. I always watch these walk-ups. This is an example of sort of what I consider a chart cleanup. They're cleaning up the chart. And for whatever reason, we don't know yet. We found out on Friday, but we had been watching this, and you can see this is like 2 to 350 down to 2 all the way back up to 4 before they even released the news. So what they're doing is if you were price sensitive, right? So if you had this thing and you were maybe stuck for, months, it finally ramps up. You're like, okay, it's going to go. And maybe you add some more and then you get all frustrated because it starts to fade back down. And you say, all right, well, the hell with it. I'm out. And then they did exactly what they needed to do. They got you to move on. And so the ones that didn't move on, they have this nice rally day and it sits back and they're like, okay, you know what, I got lucky. I'm going to go ahead and move on. So people start to move on, and then you can see they absorb, and then all of a sudden it's back up to the highs. And you're like, oh, I should have held it. And so anyway, next day they do the news and they run it up pre-market. And everybody looks at the fact that it's gone from 2 to 4 and it's already run up huge. But really, there's a good chance that they just hold the entire float. There's a good chance that whomever is behind the invisible hand just absolutely is controlling this whole thing. That's my opinion. And so what they do is they just kind of come in here in the morning and you can see they just start to absorb certain key levels. This is all stuff that you guys can do. This is stuff that I've gone over on videos. This is stuff that I do in the room. And this is stuff that, is just a visual reminder that, hey, make sure that you're not trading what you want and it's actually what it's showing. So you can kind of see, this is just quick lines, but you can see the absorption. You can see the dip and rips. There's a dip and rip right here. There's a dip and rip right here. How many candles in a row where it flushes, comes back, flushes, comes back? Each time that happens, that's more shorts hammering in. more longs getting out, right? Rotating the float, rotating. So now people that are chasing the news, maybe they bought 50,000 shares. And then it ramps up, sits back down. Now they got 25, and it starts to spread out amongst other people. And then that 25 becomes 10, and then 5. Their goal is to continually disperse those shares amongst thousands and thousands of traders. And as they do that, it becomes thinner and thinner and thinner, and the volume churns and churns and churns. And people think that it's a lot thicker than it really is. They start to trap shorts off the open, right? We always talk about in the morning, 9:45, 10 a.m. plus. If you are trading prior to 10 a.m., reactive trades, proactive covers. What does that mean? If you react to something, you better be covering on the flush, right? You don't have enough data yet to trust that this is a full day kind of fade, because you never know. What if they are in this consolidation period, this soak period, where each flush, they're just absorbing size, right? So it's a thin float as it is. And then think about if they own the majority of the float coming into the day, they gap it up, make people think it's a good short because it's run up from 2 to 4. Now it's at 6. So everybody starts to make decisions based off that. Yep, makes sense. It's going to go back to 4. And then they just churn and churn and churn. If they already own most of the float, and then they churn and churn and churn, create this volume, make this appearance that, you know, it's super, super liquid, well, then they can move it on air. And everybody that thought it was as liquid as the volume showed, oversized, they forgot how thin it is, they move it up very quickly, and all of a sudden, it's an emotional disaster. So that's exactly what happened with, you know, this particular trade, in my opinion. The other big thing was right over here. You had this huge exhaustion move, but what happened? What happened after that? We had an absorption, right? So we know that this is a clear, you know, blowout move. But what do we know? We know, looking left, that this was a key level all along, this 650 level. They did a little dip and rip. They failed, came back up, and then guess what? We triggered through that prior high basically up here, but just going right here, prior high, dip and rip, and then away it goes. So this is all avoidable. This is why, you know, in IU, you saw me say, you know, it 650 over and under soaks a few times, you know, I would definitely adjust or move on. And then again at 1016, I had said 650, if no adjustments, cautious. This is where if you're oversized, you'll make an emotional cover. Best to behave on the front side until basically that 609, 610 level breaks down. And I said the more that it trades over, the better. But you know, this is where you need to kind of take that step back and just wait for things to prove you right rather than assume you're right. Because everybody that thought they were right got smoked. And so anyway, we had that great opportunity, and then it went into the circuit halt. And so this is why earlier I said 802. And so what I did in IU is I drew a line at 802. We were in the lounge discussing it, and I said, I don't care how high it goes. I don't care if it goes 10, 12, whatever. What I'm interested in is 802. And the reason why is because that's when everybody was bent. So we know all of this is short cover, right? We know that this is all, like, sure, there's some shorts that come in here, but all of this shorts are upside down because this whole run up. But the first time that maybe there's a little bit of sentiment shift or trend change is right over here, because this is where it circuited up to 802, gapped up, flushed back under. I still don't care, because what if they just soak it at 802 and then ramp back up? What I want to see is rejection of 802, rejection lower, and then the edge starts to come. Until that happens, there is no edge without this outlier sort of risk. So that was very, very clean. And then again, like later on throughout, as this thing started to fade off, you know, a VWAP obviously came in there. But good reminder that just because it's faded from 8, 9, whatever, down to 6, 5, be careful bouncing it. And people think like, oh, it's that's a late kind of warning, but no, it's still $2 per share, $3 per share early, right? So there's so much more downside by being patient without having to worry about this stuff that most people don't ever get to see because they're so focused on trying to figure it out. But knowing which ones have that backside potential, this is a perfect example of that. And you didn't even have to trade any of this. You still had a big trade from here, call it $6, all the way down to into the threes, right? So at least $2 per share without this outlier risk. All right, so I think that is what I wanted to go over. And then we can go over scan for the week ahead. So second part of scan, as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. So MLGO, obviously, we've got some sort of gap down so far. Will that remain? Maybe, probably. And, like I said, when I covered it at the close, there's a good chance it gaps down, but I want to enjoy my Friday. I don't want to be checking my phone at night, and just, God forbid, this thing wrapped up after hours. It's just not for me. And I guess that's all manageable with trading the right size and all that kind of stuff. But for me, I just went ahead and covered it at close. Sure, it faded another buck, but that's okay. What I'd love to see is some sort of morning shove and failed follow through. Standard kind of trade. Just be cautious, oversizing. There'll be like little 30-cent kind of rips probably. Those I think would be great opportunity. So higher the better, failed follow through, but I do think that this finds its way back down towards 2. Just go back and look at stuff like HKIT. It's not necessarily an exact liquidation play, but the point is once they bail, once they pump and get their exit, I mean, that's it. They're not going to support it until they're ready to do something again in 6 months, a year, or whatever the case may be. So just be aware of that. AFRM so far, pretty nice unwinder. This was a nice watch with IONQ types and pretty much anything related to the market. So I'd be watching this one. Pretty clean breakdown after it broke the prior support. We had talked about this being that Rivian setup. So if you guys had looked at Rivian, we had that huge move, and it's literally a carbon copy. It's had the first move, and then now it's starting to come back, and pretty much doing the same kind of trend that it did. So that said, this is maybe the blueprint to kind of watch. We might have a bounce or two, but keep in mind, IONQ, very similar to AFRM. So you start to have these wicks, right? And we talk about the wicks on the bottom for longevity, for swings. Now you've got the wicks on the top, right? So you've got bullish followed by pressure. Bullish followed by pressure. That's what these wicks are. Every single day, this thing pushes up only to sell off. So they're only letting it rise to create liquidity and dip buyers on the way down is what that's kind of signifying. So keep that in mind. We are coming into some support. This has been a great daily driver. I call a daily driver names that you can go and be comfortable with each and every single day and trade sort of the same size. The NEOs, the XPEVs, the IONQs, the AFRMs, the Maras, the Riots, all of those, versus something where MLGO, maybe you could trade 20, 30, 50,000 shares on Friday, but come Monday, you can only trade 2 or 3 or 5,000 shares based on the liquidity, right? These ones are always great opportunities to come in and, count on them for good opportunities. WW is the only other one. This was a great opportunity this week. This was a nice catalyst-driven trade. We talked about this and what that catalyst was, and then as it passed, the bid just kind of dropped out. So if everybody's kind of holding it for this big announcement and all this crazy stuff, and then the price action does not agree, what do you think people are going to do that kind of bought into it or held into this, expecting a huge move on this catalyst, and then nothing happened? So that said, we did have some other comments. I think it was Goldman, and then there was some other, I think there was a Barron's piece this weekend, which kind of drove it back up. But I'd still be treating it the same. Look for kind of pops. This almost kind of reminds me, we talked about ACHR the last couple days. This should look familiar. I compared ACHR to APLD, where it has like 900 lives and then it finally fades off. Very, very similar concept, right? So like this is the obvious trade. Everybody's on the same side. This is the give up trade. Everybody that knew that it's going lower finally gives up, and then the reality comes. And so I had compared ACHR to that as well. But point is WW kind of reminds me of that as well. Right now we're in the obvious stage. Everybody knows that it's probably due for a pullback. So we need to work out the obvious size and traders and everybody that's sort of emotionally attached to it right now. And then we'll have an opportunity for later. Next up is failed follow through. We've got higher the better there. So hopefully we've got some good opportunities. This was a great trade on Friday. Nice blow off move. We used 450s as sort of the exhaustion level. The more it trades over 450, the better. Failed follow through, completely came apart at the close. So again, this is more of a trading vehicle to me. Higher the better, squeezes out, failed follow through, and go from there. ACHR, same deal, higher the better, failed follow through. And LIFW. This LFIW is fantastic. I'd love to see some sort of 26 kind of blowout move. And then I don't think that's likely, but I'm hopeful. But otherwise, a VWAP sort of exhaustion, 22, 23, and then unwind back down towards 17 and into the singles. And then the last piece is the continuation side. No position on CYBN. Just watching that, really nice one. This was a Cody idea. He got long. I think one of the funds, Cohen, I think was involved in that one. Don't quote me on that, you do your own research, but I think that's why he was originally interested. But so far so good there. GLBS, notable, nothing to jump in front of. I've been watching it. You can see the wicks. You can see the that it's kind of driving up higher. Let it do its thing. Let it blow out, and then after it blows out, we're gonna have nice steady pullback. If you need, if you're a visual learner like me, look at CGC, look at ACB, right? You don't have to be first in, but don't forget it when everybody else does. Then the last couple is SHOT. I've just been watching this one. This used to be JUPW. We're walking it up. At some point, I'm sure we'll have a liquidation play, something to keep on radar. CLRB, same deal. For a breakout type trade, continuation side, watch dips, 250s as sort of the guide. And then last but not least, we have CJYL, which, it's just setting up it's doing all the signs. And if you look at the volume right here, just look at it. This is all wash volume in my opinion. So they're setting this up. They're trying to create trades, create liquidity, create shares, and catch shorts. And then if they catch shorts and they get them on the wrong side of the trade, they can now use those shorts in the cover and the buy-ins and potentially red show later on to then exit, right? So this, just by looking at the volume, this is not natural. And that's the point here. Not natural, not natural, not natural, not natural, not natural. It doesn't trade the same amount of shares every single day. It's thin as can be. All they're doing is just making the appearance that there's a market here, making you want to chase it down, and they're just waiting for the wrong trader or the wrong squad to slip up and just short too many too soon and use that to their leverage to blow everybody out. So be aware of that. You guys know the drill. We've talked about this many times. But that's about it. So hopefully you guys learned something from that MLGO or LFIW. Otherwise, have a great rest of the weekend, and we'll catch you guys in the room on Monday.